Welcome to Trading Lounge and the US indices for the 18th of August, and starting with the weekly chart here, we're looking at a expanded flat for wave 3 here with an A wave, a B wave and a C wave here. An expanded flat takes out the top here and also takes out the low of wave A here, and we can count this up here as 3 waves and we can count this down here as 5 waves here. And then the current move up through here, we're looking for wave 1 here, and then an ABC for wave 2 here in this space here. And I was thinking this would probably happen around the election times, either Trump not getting in and sabotaging the situation for the Democrats. Pretty much the same sort of routine in the 2007 situation and 2008. So the only thing that I'm a little bit unsure about is how far this will pull back technically as a wave. Let's go to the daily chart here. So technically this wave 3 here, this top here, when it comes into play here, can pull back to the wave 4 of 1 lesser degree. So that's where it can pull back. Will it pull back that far? I don't know. So what we just need to do is we just need to track it in its form and so on. So it's something that we'll just have to navigate through this situation. So yeah, so what we've been doing is been working this particular structure here, as you know. Obviously the old high here at 34 is going to play a part here. Now the market can do whatever it wants really, but you know, it's going to be in this range below the 34, above the 34. It doesn't really matter, but at some point we should see some sort of reaction from that space, and probably a news event that would fit that situation as well. Let's go in and have a closer look at this. So I might just go straight to the hourly chart here, then to the 15-minute chart here. So from the hourly chart, I've been counting it from the low here of wave 4 here, with wave 1 and 2 here, and then 1 and 2 here, and then 5 waves up here for 1, 2, 3, 4, 5 for the wave 3, and then 4, and then 5 of the third. So 1 and 2 and 3 and 4 here, and then going up for wave 5 here. Now it is possible to count 5 waves from this low here into this space here. You could probably even look at this as wave 4 and wave 5 here, like on the cash market, and put this as wave 4 and wave 5 here, but then we would need to bring this here across. This is on this market, this is the high here. So I'm thinking this is wave 4 here, and also too, wave 4 can actually sit in here as well. But I'll leave it here for the time being, and the reason for that is because of the Nasdaq as such. So if I can just bring the Nasdaq across here for a moment. So we've got wave 3 and 4 here, and then we've been working upwards, as you know. So wave 1 and ABC for wave 2 here. A little bit complicated for wave 3 here, but it all fits quite nicely. And then we had our A, B and C for wave 4 here. And then we've been counting this little structure up here. So in this one's a little bit clearer, that's all. That's why I'm just bringing this in. So wave 1 and 2 here for this, and then wave 3 here. So wave 3 will have 5 waves in it. So 1 and 2 and 3 and 4 and 5 here, and then an A and a B and a C wave here for wave 4. So that's quite, this is really quite sort of clear here for this. And then we were moving to the upside here for this, and we've probably got, and I always work to the conservative side of things as well, of course. So we've got wave 1 and 2 in here, and we could look at this as all the third wave in this space here. So we can expect a 4th wave to come into play and a 5th wave to come into play here. So will it reach the level that the medium level here? I don't know. Unless something else occurs here, then we probably won't reach this area here. But our next step with this, with the Nasdaq, really is with the trading levels. If we get support on this 11,300, and this is wherever you see a 3 with the trading levels, it will be group 1. So this is minor group 1, 100, 200 and 300. If we get support here, then we can look at going up here, and we don't have support. We've just arrived here. So the normal thing is that we would have the arrival, the reaction, the first high above the level, and then some type of corrective pattern here. And then if it takes out any of these highs, then we can call that 300 the support at that point, if it takes out those highs there. And then it can move up to the next level. If it's going to fail, this is where it's going to fail from, at the 300 here. Even though it can trade above it, it can just eventually just fail and move down from there. So we just need to be a little bit cautious about this area here. So yeah, just be a bit mindful about that. But you know, with the Nasdaq, this is just a clear account in this space here. So we'll just continue to monitor that. It's been quite good for us, this, because the S&P has been a little bit messy, but the ABC here played out well, and this is all playing out reasonably well here. Some of it's been easier than others, but yeah, look, that's where we're up to at this stage. So we'll just see how that plays out. But I was going to remove that now. So on the 1 hour chart here, this would be in line with the Nasdaq. This here as 1 here and 2 here and 3 here and 4 here, and then going up for 5 here for this. Okay, one of the things here that you can see now is that we've got the midpoint at the 50 here, and then we've got 65, 72, that might not be in place right, but and then 80 here. So this is all of group 2 here, and what we can see now is we can see that the market once again is sitting above the 80 here. Now it's checking, testing for support on the 80, and the way to clarify that is simply by, well, let's just go in a little bit closer here for this. So just coming back a little bit, so wave 3 and 4 here, then 1 and 2 here, and 3 here, and 4 here. Yesterday, we also looked at this being wave 1 here, because it does count. I can count it quite nicely up here for wave 1 by the by. And we can look at that on the tick chart. So, and this pulled back 50 or 60%. So I've also just sort of got this hanging here where we've got wave 1 here and wave 2 here. And also yesterday as well, we noted that we had the 5-wave sequence up here. So that means that we can go long above the high here, or anywhere above the 61.8%. I may have even mentioned the 72 here. Either way, this is an impulsive wave, so we can go long above that. And yeah, this is how it's sort of panning out. So we could look at this. If this is probably wave 4, but if the market continues to rise, then we'll look at it as wave 2. So we'll just keep that in the background. But if that's wave 4 there, we'll look at this as wave 1 and 2 here, and we'll be looking for 5 waves to the upside. So 1 and 2 here, and then we'll be looking for the 3rd wave, which is 1, 2, 3, 4 and 5 here for the blue wave 3, and then 4 and then 5 here. So that's how that needs to play out here. So we could keep this market positive as long as, well, say the 72 here stays in play here. These series of 1s and 2s here, they would need to stay in place here. If the market breached that, then there's something wrong with this particular pattern, and then we would see further downside in that. And if that was the case, then it would probably be part of this correction here, and looking at this as an A wave here, B wave over here, and a C wave back here, and then up from that point. But anyway, this 1 and 2, this low is critically important, and 1 and 2 here, this low is critically important here. So we can just sort of average that out at the 72 there. So 3372, if that becomes the retested resistance, then you need to be out of that market at that stage. The tick charts here, let's just bring in a little bit of data. Yeah, I'll just go over this here. I just want to share this a little bit because the more eyes on this, the better, and people's comments are good for this. I've put a, on TradingLounge, I've put a tab there, CFD Trading Forum, which is a forum there. So you can go in, you'll need to sign up for that. I mean, it's free, and just register or whatever. And you can post charts there, and we can start talking about this a bit. So that's CFD Trading Forum, and that will be, a tab will be on the TradingLounge site for that. So 1 and 2 here, that fits well. 1 and 2 here, and 3 and 4 here, and then up, I've counted this out here, up for 5 here, and then an A and a B and a C for wave 4 here, and then up for wave 5. So it counts nicely as wave 5 here. So I just got to take that on board here. The wave 4 here, I just quite haven't figured it out yet. I just need to spend a bit of time with it. But look, it had 5 waves and it's pulled back to the 50-60% retracement level, and then it's moved up from that point. This move here doesn't count very nicely as a 5-wave structure, so I'm wondering if it's part of all of this structure here, which I haven't had time to ponder just yet. So, but even so, in this instance here, I've been looking at this as 1 and 2 and 3 and 4 and 5 here for 1, ABC for 2 here. This is 100 ticks, 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the third wave here. And then once again, we've got that really weird correction here for this, which is pretty much the same as this one here, just a smaller version of that. If this is a wave 4 here, then this is likely to be the wave 4 here as well for this one. But we should still see further upside here. It does appear that we're getting excuse me, an impulse wave up here, so 1 and 2 here, and 3 and 4 and 5. So we're going up here for, just finishing this off here, so we'll be looking at a wave 3 here, then a bit more of a complicated wave 4, and then wave 5 moving up here towards the old high up here. So we've still got further to unfold here with this in Elliott terms. Yeah, so that's it in a nutshell. I'll just leave it at that. Just to recap, the market remains bullish as long as the 72 remains in place. You could probably take that to 75 without too much problem. It shouldn't breach 75 at this stage. And for intraday traders, then going long above this top here would be the correct thing to do, because when you think about this, the market has had its arrival over here. It's had its first high above the level. It hasn't dropped back down below the level. It's just sat there in this case. So this is the variation. So normally we look for this particular pattern here where we have the arrival, the reaction, the first high above the level, and then we have a look at it coming down below the level, which I kind of like. I don't mind either actually, but I like it when it tests lower and then gets back on the level, because it's telling me that, you know, the orders, the demand is there, and then it sits on the level. Then you've got the psychological part of it where you've got this price level here gets filled up with buying orders, you know, which really comes to the support. But the variation of this is this particular pattern here where it doesn't drop below the level. So then we look for this as the trigger up here, first high reference point, and then the second one comes into play here. So in this instance here, we've got this high here, so we're taking out, we could take these highs out, or this one, so we're just dropping it down. So this would be the one to take out here. Could you buy it at the 61.8% retracement level here? You could. and that would just take on more risk as well. And then of course you can bring in the levels here again, because we've got group 2 here. We can go into the next levels down, which is 1, 2 and 3 here, and then 5 the midpoint, and then we've got 8 here, and then with 8 we can work in group 2. So it's good to know these, because you can build trades in them, and if you're putting a trade in and you're working with the levels, then you'll know where to put the stops as well. Okay, enough waffling. Thanks for tuning in. Cheers.